Hey, welcome to the 40 Finance channel, everybody. Today we're going to be talking about stock market remorse and regrets, whether that's on the buyer's side, if you have buyer's remorse. I certainly do, for buying a few stocks and then seeing whether they went down completely or simply didn't live up to expectations. But there's another aspect. This year we're talking a lot about buyer's remorse. As we all look at our portfolios, and almost everybody, unless you're 100% in energy, almost everybody has some downside positions. So we're talking a lot about buyer's remorse in the media, but what does that tell us as we get near the bottom? There's probably a bigger risk to the second form of remorse, and that would be seller's remorse. So if you have a great company that's got a good balance sheet and is expected to do well in the long term, you could very well get yourself into a two-sided coin of both buyer's remorse and seller's remorse if you are planning to sell out. And that's a really hard thing to visualize right now because there's so much negativity in the stock market and in the media. But what I'm going to do today is share my top 4 positions in my portfolio and kind of talk about where I stand on the remorse regret scale and where I see the opportunities for these companies going forward. Now, before we jump in, I can tell you that there's one offer out here that you're likely not going to regret, and that is a Seeking Alpha end of year sale. $39 for a full year of their premium service. That's all the stuff that you see me put on my screen throughout all my different videos. You guys know I'm a big supporter of Seeking Alpha, and this end of year sale right now is scheduled to go through January 3rd, $39 for an entire year. And I can tell you that's significantly less than what I paid a year or so ago for Seeking Alpha. I think I was in about the $200 mark, about $199. And I don't have regrets for the money that I paid on that. So at $39, it might as well be free as far as I'm concerned. But if you're interested in checking this out and you're interested in supporting my channel, my affiliate link is in the description below. Again, the sale is supposed to go through January 3rd. I don't know if that includes January 3rd or if it expires on January 2nd. Either way, I feel like it's a no-brainer, and you could even consider giving it as a gift to somebody if you're looking for a last-minute opportunity there. All right, now let's talk about the scale of remorse, regret for my top 4 positions. And the number 1 position in terms of market value is the QQQ. Talked about the Qs quite a bit. I also own the TQs as well. And suffice to say, I've gotten my share of feedback from people throughout 2022 about how dumb it is to be buying technology stocks in the era of a downturn. And as we look at this today, $267, my cost basis is $350. Okay, I think it's like $352. So right now, the haters and the bears are winning substantially, $267. And if we go like on a year-to-date range, minus 33%, is where is the performance of the Qs since the first trading day of 2022. Now, I didn't buy all my shares on the first trading day. And as a matter of fact, I kind of picked things up here after the January dip, but it didn't really matter because I ended at 350 despite scattering my buys throughout the year. And while it looked like I had a little bit of hope over in August when it bumped up to 332, it's since trickled down from there. And if we look at the 52-week range, the low over the past 52 weeks is $254. Today we're at $267. Frankly, I never thought we'd even be talking 250s again, but we're knocking on the door depending on what happens in these last 4 trading days. Now, all that being said, do I have buyer's remorse for the QQQ? And I will, just to be fair, 50% of my feeling is yes, remorse that I wasn't more patient for it to come down from where I started at, right? I got too impatient when we started to have a dip in the stock market January and February, and I rushed right in with my first buys. Now, flip side of that, thinking about sellers remorse, I think the QQQ right now at 267 has a big potential to produce seller's remorse if you were to sell today. I would never sell my Qs at 267. In fact, I never sold them at 330 back in August. So I'm in long. I have a little bit of buyer's remorse, but I promise you I won't have any seller's remorse because I think this does bounce back up somewhere in 2023. It may take a year from now. I don't know. Frankly, I don't really care. I just want to be able to continue to add to this position. You know, I got into the Qs to take off some risk from the individual stock picking, which of course a lot of us, you know, basically failed at in 2022. All my individual stocks except for I think it was Visa, Taiwan Semi, TJ Maxx, all of those I did sell for a small profit this year just to take some wins in a really bad year. But there was plenty of losers in there. All my small caps or smaller type companies are all struggling woefully. So I pivoted to the Qs, knowing that it was riskier than the S&P 500, but at the end of the day, it was also a risk balance for the individual names. And even though year to date, you're at minus 33%, I mean, you can look at just about anything out there, you know, the Shopify's, Tesla, whatever, they're down more than 33% in a lot of cases. All right, my next biggest position is PayPal. And PayPal, opportunity for a ton of buyer's remorse here. Over the 1 year, so 12-month cycle, you're talking about 64%. If I bring up this 5-year chart, I was a buyer in 2021. My cost basis today is 168, but I have plenty of shares of PayPal in the 190s, okay, and probably a couple in the 200s. So as far as buyer's remorse, yes, I wish I was a little more disciplined in the way that I bought into PayPal. But I will say a lot of the things that I projected about PayPal, or a lot of the truths, at least for me, turned out to all be true. I did a lot of comparisons to Square and why PayPal's likely a better company than Square, and that kind of turned out to be true depending on, you know, your opinion on Square and Bitcoin and all those things. I also talked about the likelihood that the Cash App that Square has was targeted towards a demographic that was going to have problems in the upcoming year, and I think that they have. And Venmo has a completely different demographic, and they're continuing to see an increase not only in accounts but adoption purposes, right? Integration with stores, whatever. So I still like PayPal as a company. The one thing I may do from a remorse regret standpoint is I happen to have 125 shares, and it's first in, first out kind of cost basis calculation with Ally Bank. So I'm probably going to sell my 25 shares that are my oldest because if I remember correctly, those are in the 190, 200 range, so I can trim a little cost basis there and offset some of the gains I had from Visa, Taiwan Semi, etc. Now, when you look at earnings estimates for PayPal, they're still doing fine. Okay, this year, step backwards, a lot of reasons for that. I'm not going to get into them here, but the management could have done a better job. I'm just going to leave it at that. This year, however, 2023, when we flip the calendar, 477 is the estimate. That puts your forward PE at 1437. And when you look at the potential revenue growth, this year they did 8.6. Next year they could get back to double digits. I still think that 68 is a very fair price today. And who knows if it keeps hovering around this 68.70 mark, you know, a few months from now, I may continue to add to the position. But I think the risk for PayPal right now, when you think about buyer's regret and seller's regret, the risk for PayPal is definitely on for the sellers at this point. All right, next up we got Zillow, and with Zillow, I'm at $67. Price today is 32, and once again, it's a very common story that a lot of stocks have seen this year. Down year to date, 48%. If you go on 1 year, it's about the same on 1 year, 48%. But my biggest regret on Zillow, so when I saw Zillow was in the hundreds. In fact, it peaked at 203. And for some reason, when it got under 100 is when I got excited about it, because I had always thought about buying into the company before the pandemic, but it rocket launched too high. So it started getting under 100 and I started buying, and it kept going down even from there. So from a regret standpoint, I wish I was more patient and I could have bought more shares at a smaller dollar value, obviously. And then the other thing that I would kind of like hit myself for is buying a real estate stock at the front of a real estate slowdown. Those are certain things you can control. You can't always control the company, but you can take a look at the market and probably do a better job to say, hey, we're in a housing boom. It's probably not going to get much better than what it was 18 months ago. So I kind of kicked myself for that. I'm not selling my Zillow shares. I like what they're doing, and I feel really good about their timely exit in the home buying business. That was an experiment that failed, and they owned up to it quickly. And now we're coming back into a zone of profitability. If we look at their earnings estimates here, next year is another step backwards, right? If projections hold true, $1.12. That's still a forward PE of only 28 or 29. And then, the out years, which will likely include some sort of real estate rebound, then you're going up from there. Now, revenue, this year's revenue growth is way down, okay? Next year could be really bad and might even bring on more selling for the stock. And in which case, I would be much more likely to buy. And the reason is because eventually this real estate market is going to turn around, okay? And that's just, that's my opinion. But we don't have enough houses for people today in the United States. We know what's going on with interest rates. We know that they're taking 1%, 2%, 3% in neighborhoods off of the price. So the prices are going to come down. They're not going to tank. They're not going to lose 50% of their value. Okay? Stop waiting for that. But they could go down 10, 15%. In some hotter areas, maybe 20%, right? But the bottom line is people still need to live in houses, and America doesn't have enough of them. That's why I like where Zillow is. The mistake I made was buying it, let's just call it at high tide, and now the tide is out, and we see who's swimming without pants, as they say. But I would definitely consider continuing to add to Zillow, certainly at the $32 mark. And from a remorse standpoint, I think if you've got 3 to 5 years, you will see this one come back around, and I still feel good about the company. All right, next up we have Magnite, which is an ad tech play that I've been in for a while. And, the same story, different stock when you think about something that was riding high in the pandemic. Let me see if I can get a look for you. It did have a $58, $60 peak in early 2021. And somewhere in these 30s and 40s is where I started. And today's cost basis for me is about $20. And obviously today you're at $10.64, so I'm down 50-ish% on Magnite. Now this is one, as odd as it has been for small cap stocks and advertising stocks, I don't really feel that bad about the minus 50%. It's not a great feeling, but I know that we are literally right now in the absolute deepest hole in advertising that we're likely to see for some time. Maybe that bleeds into the first half of 2023, but eventually things are going to come around. So I have zero interest in selling Magnite at this point. From a buyer's remorse standpoint, if I could predicted the fall of advertising, which, maybe some people did, there might be some remorse there, but I didn't really see it that way because Magnite was a connected TV leader in the ad tech space. Either way, this was kind of a push for the fact that connected TV is growing and it was never really meant to be a 1 or 2 year hold. And as far as selling from here at 1064, I have no plans to. And ad tech is very fragmented. You never know which stock's going to win, but I still feel great about Magnite for the next 3 to 5 years. All right, we'll finish with one more here with Microsoft, right? And this is not a stock I own. This is just a random, throw-in that I'm doing here. And if we look at the peak of Microsoft over the past 5 years, very roughly it came on the front side of the end of 2021, approximately $344. Okay, today you're at $238. But with that being said, $100 off of its peak price on the 52-week range, I think that this exemplifies buyer's remorse, seller's remorse, and the quandary between the two. Okay, so if you owned at $340, if you bought your single share at $340, now you're down to $238. Everything we know about Microsoft, would you sell today? Do you think you're more likely to satisfy your buyer's remorse by selling? Do you think you're more likely to have massive seller's remorse by selling Microsoft today at $238? And just my opinion, I think that if you sold today, you are likely going to have seller's remorse significantly over the next 3 to 5 years. If we just look at their earnings estimates, it's not going to be a rocket ship ride back to 350. Okay, EPS right now at 954. They have a wacky fiscal calendar that ends in June of 23, but today's forward PE is 25. Once we get to June, if we held at the same price, 21.38. And if we look at revenue growth, single digits this year, but then next year you're back in the double digits. It's just really hard for me to see a world where Microsoft doesn't generate shareholder value. And while you may have to catch up if you purchased at $344, if you bought one share at $344 and that's your cost basis, I think the easiest way to go positive on your Microsoft is to just, not even double down. Just buy a little bit here or there. But I think selling today would eventually generate seller's remorse. And so I wanted to use it as an example because it's, Microsoft is such a big company and they had such a great post-COVID run, if you will. And now we see it, that it's down 30-some% maybe from its high. But it's one that I don't know if you have to sell the stock to anyone, right? Do you have to go on a show and say, breaking news, Microsoft, I'm stamping a strong buy for Microsoft. I don't think anyone needs to hear that. They understand what the company is and what it can do in the future. And I just wanted to use a bigger name to kind of, get home the point. If you have buyer's remorse for buying, selling today could generate seller's remorse, and then you'll have the wrong side of both equations, both when you got in and when you got out. And so obviously you kind of have to pick a side here on this with these investments in the year that we've been through in 2022. If you bought high and sell low, you're the double loser, right? But what happens if you can afford to wait a little bit? And if it's a company like Microsoft, I think time heals a lot of the wounds. All right, so that's a video looking at both sides of stock market regrets. Buyer's regrets, seller's regrets. A lot of us have buyer's regret this year, okay, from the past 2 years. Don't feel bad. The only guy who's probably doesn't is the guy who bought oil stocks only over the past 12 months. The key to avoiding seller's regret, which would still happen if you sold today, is trying to figure out which companies are so strong and are just being dragged down by negativity, they will bounce back. And in my case, I have quite a few in my portfolio that I'm like, hey, tough times now, better days ahead, and you'll always have the chance to sell. You can log on and click sell at any time, but owning shares at a certain price that may never be available again is something to think about before you press that sell button. Before you go, don't forget to check out the Seeking Alpha end of year sale. My affiliate link is in the description. I hope everybody's doing well. Have a happy holiday. We'll see you on the next video.